O'Cannabis. Really delighted. Great friends with O'Cannabis, and always excited to participate in this conversation. I'm Tom Zuber, managing partner of Zuber Law LLP. We're a law firm in the United States. We have 7 offices. We've been in cannabis since 2006, which is a very long time in the United States. And so in that time, we've come to represent a large percentage of the biggest brands in US and increasingly global cannabis in respect of high stakes deals and litigation, IP and regulatory work. And I'm also a co-founder of Global Go, which is a cannabis consulting affiliate based in 10 going on 11 countries. We have an esteemed panel here. I'm very excited for this conversation about taking companies public in the cannabis industry. So I'm just gonna go here from right to left and allow my esteemed panelists to say a few brief words about themselves, and then we'll launch into the conversation. So first, Melanie Cole with Berlis. Do you want to tell us a bit about yourself and your background?
Thanks so much, Tom, and it's great to be here. Melanie Cole, I'm a partner at Berlis, where you've been involved in the cannabis industry since prior to rec legalization. So we have hundreds of clients in the space, and our executive was really open to cannabis at a time where a lot of Bay Street firms weren't. And what that allowed us to do is really develop an expertise and sort of punch above our weight in the industry, and that's been really, really exciting. So we, like you, have a very broad practice dealing with cannabis companies at all stages, and with every sort of business law need they may have. So it's been a really exciting time, and thank you for letting me introduce myself.
My name is Vahan Ajamian. I'm a capital markets advisor with High Tide. Background is in capital markets. So I spent 12 years in equity research. Since 2016, when I was with Beacon Securities, I started covering the cannabis sector. When all the companies were starting to go public, all the Canadian ones, and then we also focused starting in late 2016 on the US sector, helping US operators go public up here in Canada, and making sure that we had good research and trading and investment banking services. So I then switched over to the issuer side, so I've been on both the analyst capital market side and on the issuer side now with High Tide, where I joined in late 2020.
So my name is Brianna Martyn. I started in cannabis in 2017, co-founding several companies, which I've now exited, and now I'm the founder of Big Stock Tips. So I do social awareness campaigns that allow publicly traded companies or brands to reach new viewers that they wouldn't through traditional media.
Great, thank you, Brianna. So why don't we start with the basics here. Going public is sexy, of course, but at the same time, in terms of practical benefits, there are other avenues to capital. So why should a cannabis company go public at all? Why don't we start with Melanie?
Great, and thanks so much. I think there's a lot of really compelling reasons to go public, and sort of similarly, there's a lot of challenges, which we'll probably get into. I think the biggest one, for founders is liquidity. So you'll have long-term investors who are able to exit their investments. So that's a huge advantage, as is the valuation bump that you'll typically get. And similarly sized companies in an industry, if you have a private company and a public company, the valuation is often quite different for a public company. Another large advantage is access to people like you. You'll get more attention from analysts and iBankers. You'll be able to build a brand in a very, very different way. So you have a lot more visibility. And I think, you said capital is one way of accessing capital, but it's also, you can use your publicly traded shares as currency, and we're seeing that more now because we're seeing fewer public listings, but we're seeing existing public companies being able to use their stock as currency in M&A transactions, and that's highly, highly valuable. And also something that people don't really talk about as much is the fact that you can reach a wider talent pool when you're a public company, because you're able to incentivize your leadership with all employees with stock options and other equity incentives, which is a really huge advantage in sort of building out your governance and building out your management team. So those are a few things.
think those are all good points. And I'd echo all those and give the High Tide example. I mean, it's founded 12 years ago by Raj Grover, who's still is chairman, CEO, president. We took the company public on the CSE, and at one point you still owned 45% of it, right? And being able to use the company as currency. Made a bunch of large acquisitions, and a smaller one which closed today of 2 stores, which were again, mostly by share consideration, right? In the meantime, it's also helped us raise capital. So we did, 2 equity bought deals last year, right? And it really helps, going from private to public. It really helps you keep your foot on the gas, where you keep growing, or in our case, by adding stores organically or through acquisition, gets you high profile, your customers know you, especially in the cannabis industry where it was all medical. You couldn't have customers, but if you had X thousand shareholders, you had that affinity with the general public, or at least a certain proportion of it, and that was the theory that was supposed to help you when you actually went to adult use.
So isn't there a flip side though, because with some of the benefits, Melanie and Vahan, that you discussed here in going public, there's also the notion that all of a sudden you don't have the same level of freedom that you would otherwise have to make decisions, because you're always concerned, how is this going to affect my stock price? And that's a short-term response to sometimes a long-term perspective, right? So there's that challenge as well. So I don't know, maybe Brianna, if you want to touch on that a bit.
Yeah, I think sometimes you find publicly traded companies where their stock price doesn't actually reflect how great the company is. And that has a lot to do with maybe the marketing plan or their investor pool, or how they're getting their news out. So using the traditional media of press releases and that kind of thing isn't really how you're going to reach the new type of investors, especially for pot stocks. We kind of have to increase the range there.
So, Brianna, let's stay with you. What companies have done it well? Which is to say, what companies have gone public well? Do you have any particular examples? And tell us a bit about why you feel this company or that company did it well.
Yeah, I mean, if we talk in the history of, pot stocks or the cannabis sector, Tilray, went IPO'd at $20, got to $300, and now is unfortunately back under $5. But Sundial, I think, did a great job. They kind of leaned into the meme stock era and was able to utilize that. They also, like we talked about earlier, use their stock for a lot of M&A deals. And then, as he already mentioned, I think High Tide has done a great job because they have someone out there in the public, Raj, who is the founder and CEO, and they've been able to really, really have a great following in their investment community, or a loyal investment community. So that has also really helped their stock.
Yeah, and I think, a lot of it is just timing, right? I mean, a good IPO is, part of it is, obviously choose your right legal counsel, your right brokers, partners, but a lot of it's just timing, right? If you go public and the market is in the middle of a downturn, there's no such thing as a good go public strategy. Or you could be a great company, great operations. If you just look at us, the last several months, revenue keeps going up, we keep adding more stores. The loyalty plan is more than doubled in the last 6-7 months, but if the market sentiment is negative, that's where you are in the cycle, well, then everything is pulling back, right? And going IPO, I guess the only strategic decision you can make is when do you do it, and how much of a lead time do you have to where the window is open, because these windows open, they close, right? And even once you are public, last year we saw when Biden won the election in November, and then even more so when the Democrats won the runoff in January, it was just euphoria, right? I mean, you could have been pretty much anybody, and you could raise money no problem, or that was a great window for companies that weren't public yet to go public, right? And now, ever since, I guess May or so, it's been a downward trend, and there have been a few that have gone public since, but they've been, from what I understand, having to take big haircuts to their valuation, sort of limp over the finish line, and then have the stocks trade down. So, a lot of it is just, macro situation dependent.
Yeah, I think we could talk about Greenway also, because in a down sector, Greenway was actually able to triple their stock while most of the sector was down. So back to the original question, that would be one that I would highlight as well.
Melanie, have you, your fellow lawyer, fellow service provider, have you seen any companies do it particularly well? You may not be as well, it may not be as easy for you to comment about clients, obviously, for obvious reasons relating to confidentiality and privilege, but can you make general comments about companies that you see maybe have done it well or haven't done well from a lawyer's perspective?
Sure. Well, of course, all of my clients have done well because I've been giving them really good advice. So that goes without saying, of course. But I would say there's some qualities that I think really have stood out to me. And one is even with founder-led companies where they've really made governance an important part of their strategy from day one, building out their board with some independence and some diversity in all meanings of that word. That's really been meaningful for companies. And also those who understand, yes, going public is a goal, but you have to understand your strategy and how you're going to navigate actually once you've reached that goal. Because it comes with its own set of challenges. So people who fully understand the landscape, who've taken the time to understand the requirements, both of going public, but then also being public, and what's that going to change in the day-to-day? What kind of control am I going to be able to maintain? And what kind of decisions am I going to have to make differently given the fact that I have this regulatory scrutiny? So that's been a few of the things that I've seen companies do well, a couple of the characteristics.
Yeah, very good points. I agree completely with those. Vahan, I'd like to come back to you, please, to start this question. Do your clients have a favorite exchange? And if so, why? Previously, everything was CSE, 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 and now there are more options. So what are the criteria that you use to pick an exchange for your clients?
So exactly. So High Tide went public on its own on the CSE. When we did the acquisition of Metagrowth, which was our biggest acquisition at the time, closed November 2020. We sort of inherited or took their TSX venture listing. And now we're still on the venture, but last June, almost a year ago now, we listed on the NASDAQ. Right, and obviously the larger U.S. exchanges are great because they have access to so many more investors, retail, institutional. The stock becomes much more liquid. So you have this strange dichotomy where but of course you have to be federally legal to list on those exchanges, right? So you have these weird situation where all the a lot of the Canadian operators that are only operating where federally legal, such as High Tide, are rushing to or trying to list on the larger U.S. exchanges, whereas the U.S. operators, because they can't list there, they're all listing on the Canadian Securities Exchange. So everyone is kind of listing in the country that they're not operating in for the most part, right? And we have operations in the U.S. as well on the ancillary side, right? CBD and accessories we're doing really well, but generally speaking, the vast majority of our revenue comes from the brick and mortar in Canada. But you want to go to the NASDAQ because that's where the money is, and the U.S. operators want to go to the Canadian Securities Exchange because that's pretty much all you can. So it's a really weird situation.
It is. It's strange. I would say maybe it's stranger from the U.S. perspective because we're watching these huge Canadian companies get the benefit of the U.S. exchanges, and it's a little bit frustrating. We're like, what's that about? Because they're able to list because they're not selling in the U.S., and it just seems very backwards in terms of logic. And of course, there's that same perspective from your angle, right?
Yeah, I think that's a huge advantage in Canada, and then we get calls from international companies who have looked at U.S. exchanges, realize very quickly they're not going to meet the market cap requirements. And it's a huge advantage that we have such a broad range of exchanges in Canada with different listing criteria that allow us to, and also there's movement within those exchanges, right? If you're a TSXV listed company and you grow, in accordance with your plan, you can uplist. And there's a lot of different a lot of flexibility that you don't see in the U.S., which is really valuable for companies. There's small cap companies.
Yeah, and pardon me, just for anybody who's not familiar with what we're talking about, I think most everybody is. In the United States, with the United States exchanges, quite ironically, you can go public if you're not breaking U.S. law. So what that translates to is that Canadian cannabis companies that are selling THC in Canada, so long as they're not selling THC in the U.S., are candidates to go public in the U.S. So that creates a sort of irony there, right? And in the same direction from the other side, our Canadian friends are watching U.S. companies go public on the CSE because the CSE doesn't seem to mind as much as other exchanges that these U.S. companies touch the plant in the U.S. So there's that pretty strong irony there that there's, it's a big part of the industry and the decision to go public. So let's go now. I'd like to talk about the tightening in general of investments into the cannabis space and how that affects companies deciding to go public. So Brianna, why don't we start with you? In recent times, how has the tightening of investments into cannabis affected the desire and frequency of cannabis companies to go public?
Yeah, I think that when you look at going public and you see all these roadblocks in terms of capital, because you need the capital to go public, I do think that is deterring a lot, or they see the stock prices of current cannabis companies. So I think that the capital would be probably the biggest deterrent for companies not being able to get the capital. And then, as Melanie has talked about already, the regulations or having everything in line to go public can be a little overwhelming.
Yeah, and I think the earlier batches that went public in 2016, 17, 18, 19, it was a lot of selling the dream, right? Give me all this money, and I'm going to build this, and I'm going to build, my costs are going to be X, I'm going to sell it at Y, and everybody has, by definition, because these things weren't done. Yeah. Right, everybody had their own little spin, and they were kind of pushing it. Well, it's all going to be about greenhouse. I need a really big million square foot greenhouse. Or another one will say, it'll be all about indoor, right? And there's, by definition, no way to figure it out or to predict everybody until it was over, until it was done, right? And now it's we're not in that selling the dream phase, right? I mean, we're in the execution phase. We're 3.5 years into rec. There's no dream left to sell. So what are your operations? Right, I mean, we've been generating positive EBITDA every quarter for over 2 years, right? And there are almost no other Canadian companies that could say that, right? And so, if you're going to go public, and unless there's something special about what you have, or really special, or you're not, you're already making money, and you need to you demonstrate that to investors, and now you want growth capital to keep your foot on the gas. That's one thing, but does the world really need the 202nd pot stock that doesn't make money, right? Is there an appetite for that 3.5 years in? Not really.
Yeah. Melanie, how about you? What are your thoughts on that, on the general restriction in capital investments into the space and how that's influencing your own clients' decisions?
Yeah, I think there's a lot of investor fatigue. This is what we're hearing from our clients who are taking calls from shareholders. There's a lot of investor fatigue, and I think that that's impacting new investors getting to the space and old investors getting out of the space. So that's a huge challenge. I mean, even 3 years ago, this was keeping us busy 100% of the time with go public transactions, and this chilling impact, it's for the very reasons you've pointed out, has been shocking, to be honest. And so, where we saw international issuers wanting to access our capital markets, we're seeing very little of that. But the companies who are already public, we're seeing very robust M&A, and that continues to be the case. So. There are other things. If you manage to make it to becoming a public company, that's a huge advantage for the companies that are still out there. But they're not issuing new shares at great valuations at the moment.
There's a show that I'm pretty fascinated with lately, and pardon me for bringing a U.S. perspective as the American on the panel, but I'm going to do it anyway. There's this show called The Offer, which is about the making of the Godfather movie. And there's a scene in there about building investor loyalty. So I don't want to give any spoilers here. Pardon me if I do. I'm going to try not to. But I think it's widely known that The Godfather was almost shut down as a movie, and Paramount almost got sold in part as a function of their producing this movie that became the greatest movie, the biggest box office success in history to that point. And the star of the show walks into the boardroom and he's trying to talk them out of selling this company. And what he says is, what's this all about? What are you here in the boardroom doing, you captains of industry? You're building loyalty with your investors. And you want to know what loyalty looks like, and he points at the Paramount logo and he says, this is investor loyalty because you're selling them their dreams. You're giving them respite for 2 hours at a time, and that is investor loyalty. If you can win their hearts and minds, you have their loyalty. So in the cannabis industry, how does one do that, right? And Brianna, why don't you start us off on this? You had what can cannabis companies do to start building loyalty before or as they're going public?
Yeah, I think both times are equally as important, and I think
Yeah.
some companies forget that. There's two huge factors in my opinion on this. Is one, you need to have a person who is willing to be in the public eye, and that person should be the founder or the CEO, and they should be able to interact with the public on modern media, not just conferences and that kind of thing, because you're only a certain amount of people there. And I think Raj, we've already talked about, does great at this. Jason Wild from TerraSend does great at this. And then also a modern IR plan. Marketing is part of investor relations and your stock price. And so having a modern plan, so not just pumping out press releases because people don't listen to them or don't read them really today. So people are ingesting information and news differently because of the pandemic and where we are now. They want video, they want short, they want clips. Everyone's attention span is very small. No one's watching 3-minute videos. Generally, it's like they want 30 seconds or less or 30 minutes. So it's really important that you're having that in your plan and you're able to reach investors, potential investors, or building this base of people who are really excited about what you're doing.
Yeah, I'd say it's a lot of that is having the person at the front who communicates with the shareholders and delivering on your promises, right? So many of these companies will be EBITDA positive, 2 years from now, and 2 years go by and they aren't, right? And it's like, for us, pretty much every single target we've set up there, we've hit, right? We're gonna have so many stores by this period, we're there, right? We're gonna be EBITDA positive by this quarter, and we are, right? All the deals that we do are accretive, right? And people look at that, and it's investors, they're smart enough to know that, okay, well, if you're trading at multiples X and you're buying a store which just closed 2 more today at 3.5 times EBITDA, that's a fantastic deal, right? And if you can keep doing that and not overpay and not have these situations where money losing company A buys money losing company B and it's all going to work out, and then of course 6 months go by and it doesn't, right? Like, it's hard to build loyalty like that, right? It's you got to deliver, you got to make the right decisions, acknowledging that the market isn't always with you and that can things change, but you make the right decisions and you deliver on your promises, and that's kind of how you build loyalty, and you full transparency, which we always have. Right?
Yeah, I think I agree with that. Companies I've seen successful, they're communicating really reasonable, achievable milestones, but they're also you talk about setting them and reporting back, and I think that's a really important point, is updating people on why didn't we reach this milestone? What happened that made this more difficult? What did we assume at the time we made that a forward-looking statement that was going to happen that didn't? I'm the skunk at the garden party. That's what I call myself when I'm looking at press releases, because a skunk at the garden party. So I'm the person coming, you can't do that, don't do this, I wouldn't say that kind of thing. But it really goes to the importance of statements you're making in public press releases or otherwise about what you're going to do and when you're going to do it. And the way you build loyalty, I think I completely agree with you, is communicating those achievable milestones, reporting on how they go, but also, trying to, pull back on the promotional language, because I think people are tired of promotional language. People are tired of statements that aren't actually coming to pass. And I think there's an expectation in the market that it's challenging. People know that it's challenging. People are aware of the challenges. So trying to just be careful in all communications, whether it's an investor deck or, whatever it is, to just be very strategic in making those, setting those goals, and then report against them, good or bad.
So you're saying the key to investor loyalty is less polish or sheen or fanciful wording or extrapolation, and more being blunt with your investors and letting them know that you're going to be straightforward with them.
Well, I think you said it well. When people in the early days were, selling the dream, and I think that that's not really the case anymore. That's not what people are looking for in their communications. They want to say, you said you were going to do X, and you have not done X. Why haven't you done it?
I agree, yeah, because there's a lot of cynicism, and I think the thing is you're really selling to folks in against that cynicism and trying to win them back across that bridge of cynicism, right?
For sure. I mean, it's about being transparent with investors. It's not everything isn't always rosy. And we told everybody, look, the number of stores in Ontario went from about 100 to like 1,500 in a little over a year, right? And the market has changed, and so rather than sit on our hands and then complain 8 months later about competition hurting our revenue, well, we got ahead of it and we said, okay, here's our discount club model, and we came out. We did 6 months of testing, and we ratcheted out. And yes, we told people gross margins are going to be coming down a little, but we expect volumes to continue, and we want to be quick out of the gate on this. And investors look back and they see that, well, our loyalty members have gone from 245,000 to 515,000, right? Doubled in 7 months, right? And our revenues keep outpacing the national average. That, hey, things aren't necessarily always rosy. It's tougher times in the retail industry, but these guys are ahead of the curve. They know what they're doing. They adapt to the current situation ahead of everybody else. So while others are reporting the lowest revenue in 5 quarters, ours keeps growing every single quarter.
Yeah, I think to wrap it up, people just want authenticity and simple answers. Like, don't make it complicated. Just give your information very authentic and simple, and you'll have investors loving you.
Yeah, I like Elon Musk as an example, where he says our stock price is too high. And I think that sort of bluntness is interesting. He's interesting in many ways, but certainly in that way. So let's talk about this. It's all fun and games going public. It's very exciting. It should be for the companies, the executives, the accountants, the lawyers, everybody. And then a company's public, and you wake up, in the mornings following, and you're like, well, I got what I asked for. And there's often a reckoning that happens across the board. And so, Vahan, I thought that you might, obviously there are some things that you can't talk about, there are some things that you can, but not just in regard to High Tide and your experiences there, but what you've seen across the industry. What are some of the challenges that companies face in that wake?
Yeah, I think the challenge is you have to live with the stock price every single day, right? And whether it's war overseas or interest rates going up, or things that have nothing to do with cannabis or your business, but just overall market sentiment, right? And sometimes things going well can almost backfire. I mean, company A goes public, and within 3 days, 4 days, it's so hot, all of a sudden, stock's up 80% from the deal price, and then you look at it, oh, wait a minute, now everybody who owns the stock is up minimum 80% in the last week, and people start profit taking, and that builds momentum, right? And if you look at even the last 6-7 months for us, I mean, our share price is down 50-odd% because the whole market has tanked. But if you look at our business, things pretty much never been better, right? But you wake up every day and you look at the screen, and depending on where you are in the cycle, and you're getting hit over the head with the stock price that's constantly down because some big investor is dumping, or because something is happening overseas, or some other licensed producer has results which are not well received by the market. It goes the other way too, right? Sometimes you wake up and stock is up 8% for basically no reason, right? So it's you go public, and that's not that's the end of the journey of going public, but that's the real journey just started, right? And it's the everyday living with, unfortunately, the stock price and the ups and downs of sentiment, which somebody in Washington came up with a bill, and everybody, stocks are all running, and then a week later people realize, wait a minute, that bill's probably going nowhere, and all the stocks that went up 15% go down 25%. It's like,
well, let's talk about that for a minute, and not just Vahan, but also I'd love to hear Melanie and Brianna. In the U.S., there's a very exacerbated effect on stock prices as a function of prohibition at the federal level, and I think there are some, including me and many others besides me, that feel that stock prices are almost artificially suppressed when you look at the CSE, when you look at the Toronto, anywhere, wherever folks are listed, even those companies that happen to be listed on the NASDAQ and the NYSE, because when you consider basic parameters like EBITDA, and you compare that to traditional injuries, and you compare stock price, it's WTF, right? Like, what is going on here? And what's your impression of that? Is it just a prejudice against cannabis? Is it just the fear of the unknown? Because it is, I mean, markets are supposed to be rational, certainly over a period of years, right? Even if you have an irrational response to an earthquake here or some sort of event there, over a period of years, there should be some degree of rationality. But is that missing from the cannabis industry and capital markets relating to cannabis? And why?
I mean, when we're talking about exchanges too, this does come into play because on the smaller exchanges, you don't have hedge funds or that big money come in. So you do have to rely on individual investors, right? Generally speaking. And so you have to compete with those individual investors that don't generally have the capital funds that hedge funds do against all different sectors, not just pot. But I do think that the cannabis sector, there's a bit of distrust, or as like they're just tired a little bit. So I think that's part of what we're seeing reflected there in price.
And I think investors probably have a lot of fatigue with federal legalization and how much it's been constantly thrown out there, right? SAFE Act, States Act, MORE Act, and when I was in analyst in 2016, right? I wrote up the report. So look, there's an election next week in November 2016, and here's where cannabis is polling in California, Nevada, Arizona, Massachusetts, Maine, and 4 of those states passed. And then it was okay. Federal legalization is coming, and it's coming, right? And again, back then, like there weren't large U.S. companies. Now there's large U.S. operators that generate dozens of millions of EBITDA each quarter. Yeah. And investors should be focusing on that, to your exact point. Instead, whether it's some of the companies themselves, some of the analysts, some of the media, oh, there's a bill here and it's going to pass by the end of the year, and everybody gets all excited and happy, and then it doesn't, and then the backlash is even worse. And then, okay, well, it'll pass by the midterms, and the enthusiasm will go up, and it's like you're constantly putting this carrot that you can't control in front of the investor, and constantly underwhelming, and there's a big disconnect there, because unfortunately companies like us, I mean, one, we're making good EBITDA every single quarter for the last 2 years. 2, we have a really good U.S. business, right, over 75 million in revenue, and very, very profitable in CBD and accessories, right? So if U.S. legalization takes 6 months, we're ready to go, right? And if it takes 6 years, then we'll just go deeper in the U.S. based on what's federally legal. The same thing we did in Canada, and leverage those relationships and that market share and mind share, right? But I think this constant, when is federal legalization going to come? It's going to come at some point. Is it 6 months? Is it 2 years? I don't know. But the point is, there's still great companies that operate in the U.S. as U.S. operators that have fantastic valuation and opportunities. And there's us that have access to the U.S. listings and U.S. revenue and EBITDA, and are just enjoying that today as you get ready for the if and when tomorrow. But when that happens, it doesn't really matter, because we're enjoying it today. But investors have to focus on that, not just somewhat, well, is this person's bill going to pass? Is it before the midterms, after the midterms? What if the Republicans gain more seats? Or, I wouldn't say it's irrelevant, but we're not selling the dream anymore. There's real companies making real money.
It's interesting, I think very interesting. I mean, this is a very big picture thing we're pointing to here. First of all, I want to state, especially for Melanie and my own sake as attorneys there at Berlis and Zuber Law, but for the whole panel's sake, nobody is offering legal advice or any sort of investment advice whatsoever.
Or political advice.
She's not, she's kidding, and just to make sure I'm going to be her friend here and tell you she's kidding. So none of us are offering any legal or investment advice. But having said that, aren't we pointing at a big picture opportunity here? Because what we're saying is that there is an artificial suppression in stock prices, and that's a big statement. But isn't it mathematically demonstrable almost? And so what does that mean? Doesn't that mean that there's basically a sort of prejudice, if you will, an irrationality applied to the cannabis subject matter as it relates to capital markets and the price, the valuations of stock? And at some point, doesn't reality, doesn't logic, doesn't basic mathematics, the principles that drive the valuation of stocks and other industries, doesn't that have to come home to the cannabis industry? And I agree, it'll probably happen when federal legalization happens in the United States. But then you ask if you have any faith at all that that's going to happen within a presidential administration or two. Doesn't that mean that there are huge opportunities here for a high tide also in terms of acquisitions, and also for investors that are looking to invest in a high tide or in something else? Isn't that
when we talk about sentiment, right?
Yeah.
The sentiment in cannabis stocks or pot stocks has never been more bearish. Yeah. And that actually makes me bullish. I'll take your bottoms. I'll take the bottom, right? Like if you don't want it, I'll take it. So I think that we will see a shift. And it might happen after safe banking. I think we'll see a shift before safe banking, but the real explosion back to, the 300 till, or is it Tilray? Yeah, 300 Tilray won't happen until we have some safe banking. But I don't know how confident I am when that is going to happen. It will eventually happen, but I don't know when.
For sure, of course, not investment advice, but obviously you want to be buying when the market sentiment is very, very bearish, right? And then just a matter of how long it takes for sentiment and or just fundamentals to catch up. Say, wait a minute, this company makes too much money to be trading at this multiple. Like it doesn't make sense. And then whether somebody acquires them at a premium, or they just organically go up, or it takes a bigger macro shock. Whether it's even not cannabis related, or war in Ukraine, or it's actual like cannabis related in terms of prohibition. Again, not investment advice, but you make money when you're the only one buying.
And that's it. I think that's a common theme here. Is cannabis itself is why I guess you could summarize it. The challenge is the opportunity. If you're willing to take a look at this subject matter and to really understand it, and to not be emotional, but to be reactive, but to be, well, I guess rational and mathematical almost about it, there are actually true profits that still exist across the industry. And if you have a long-term perspective, there's a lot to be gained, I think is a general sentiment. Let me ask, Melanie, let's come back to you. Has there been anything in particular that has flat out surprised you or one of your clients in going public? And it could be good or bad. Anything that was, well, I wasn't expecting that.
Well, I always know that I've done my job well.
Yeah.
If I get a press release, the first press release as a public company, and it's not, we're the best, the biggest, the brightest, because so much of my role, and likely your role in guiding companies, is to help them to learn how to be a public company and how to communicate like a public company. And there's this loss, you're simultaneously needing to sort of couch your language in terms of the positive news, and you're also losing a little bit of the confidentiality that you're really used to as a private company, because you are required to disclose things that you're maybe not comfortable disclosing, both the good and the bad. So I think that sometimes, the biggest surprise for companies can be that shift in communication, in the way that you communicate, the speed at which you need to communicate, what needs to be communicated, and how. I think that can be a huge shock for companies, but not as much if I've actually done my job and prepared them for that shift. I think the regulatory requirements and the filing deadlines can also be surprising, as can just the ongoing costs of being a public company, regulatory costs, filing your financial statements. You have to pay to file your annual financial statements.
Yeah.
Just the depth of disclosure in your disclosure documents, I think, can be a surprise. And we've already talked about it at length, but the volatility of the stock, I think, could be a big surprise for people. And I think just because it's taking away management attention, and it's more of a short-term focus, but you also have shareholders calling you every day, talking about your stock price and your performance. And some other things that can be surprising are, just very bread and butter things like director and officer insurance can be incredibly challenging. Access to traditional lending and banking can be really challenging. So I think all of those things can be very surprising.
Do you have companies that regret it, clients that regret it? Like how many of them? Just not a percentage, but just is it a lot? Is it a few? Is it once in a while? Is it never? Where you get companies said, well, you know what, this is too much administrative burden, the cost is too high, and the volatility is just too disruptive to the decision-making process of the stock, the volatility of the stock price.
Yeah, it's sort of my clients. I think those who are founder-led and really aren't comfortable with the changes that happen from a control perspective, and who really maybe should have stayed private, didn't fully understand the implications. Those are some of the companies who sort of say, well, maybe we should pull back from this and go back to our flexible roots of not being subject to this additional layer of regulatory scrutiny, because in the cannabis industry you have cannabis regulatory scrutiny, and when you're a public company you have a number of other levels.
Yeah, I was going to say, High Tide is a concrete example of this right now. So we were already public, obviously, on the venture, but when we listed on the NASDAQ just a year ago in last June, not only is there the one-time filing fees and lawyer fees to get on the NASDAQ, but then it's, you mentioned D&O insurance, right? To be a cannabis company on the NASDAQ is almost no providers of that. So your insurance goes up like 6x. right? And your listing fees now, and now you have to report in 45 days, not 60. So you got to add to your accounting and finance team. You got to add extra compliance people, and as soon as we listed, the next quarter took a bite out of our EBITDA, and we called it out on the conference call. Yeah. But do we regret it? Oh no, right? Because it added so much liquidity, and now real investors in the U.S., et cetera, can buy our stock. More retail following could be, and then on the M&A side, there's a lot of opportunities where if they're sitting there, whose stock do I take, A or B? And wait a minute, A is on the NASDAQ, or about to go on the NASDAQ, and their stock is way more liquid, well, that you're more gravitated to those. So I think it's paid off in terms of the company's ability to keep growing and keep the foot on the gas. But yeah, it definitely took a bite out of, and still does in terms of ongoing costs of insurance, compliance, manpower, etc.
Yeah, I think companies are, from what I've heard, is that they're surprised that they now work for the investor. It can be hard for founders, right? Or people, it was their baby, now they're public, and now they actually answer to somebody. Every time you take money into your company, you now work for the people that are putting money into your company, and that includes when you're a public company, right? So I think that surprises some people and maybe be a challenge that they have to go through.
Yeah, and each of those, seemingly smaller issues like D&O insurance. I mean, if you can't get D&O insurance or can't get it at an affordable price, that's going to impact the board members and management that you're going to be able to, retain, which will impact your ability to meet the regulatory requirements. Because you need a certain amount of independent directors. So it has this waterfall ripple effect, which is, a distraction from running the business. Those seemingly small things can be quite distracting.
Yeah, indeed, it is surprising sometimes when you're doing something how such big decisions can ride on whether or not you can get D&O insurance that makes sense, or you can open a bank account, or you can use this asset or that asset as a security for a loan or for some other context because it touches some cannabis thing like a license. So that's all just.
Or some of it is U.S. CBD or UK CBD or operations in the Netherlands. And for a Canadian lender to wrap their head around all those US CBD, can I get collateral on this? Or some of the EBITDA comes from Europe, and what's our recourse? And there's a lot of red tape as you get more and more complex.
Yeah, and internationally, we do a lot of international work, so those issues just make it a lot more fun for the lawyers, doesn't it? Brianna, let's go back to you and we've talked about the benefits and some of the challenges of going public, but let's talk about the time chronologically, meaning in history, to go public. Is now a good environment in which to go public? I mean today.
I mentioned already that the sentiment is extremely bearish, which makes me bullish, but maybe not everyone bullish. So I don't know necessarily if the economic environment right now is something that I would look at, but in about 9 months, you could start planning now to go public in about 9 months, and I think you're gonna find a market that would be better to go or IPO in. I do think it would also take, we kind of talked about it in terms of the fatigue, but I do think it is gonna take some time for the investors to gain trust into cannabis stocks again, and then again, everyone's bearish right now, so you don't really want to be pushing that. But there has been some companies that have been successful, like we've talked about. So I think it does depend on the individual company and their goals, but that's what I'm seeing.
Vahan, this is a company about going public, but increasingly companies are making a strategic decision to not go public, including many of our clients, and they're very, very, very valuable private companies, but they say, you ask, do you want to go public? Do you want to talk about that? And their answer is why? And that's an increasingly good question. Obviously you've implied or even expressly stated you're very happy with High Tide. It went public first on the CSE, now it's on the NASDAQ, makes total sense, all that credibility and the liquidity. But what are the factors that a cannabis company earlier along in the process than High Tide should consider in determining whether or not to go public today?
Yeah, I think you have to look at what the objective of going public is, right? If it's the old days of going to go public and make a lot of money, especially now with the sentiment, that's not going to happen, right? It's you get to slap in the face every year with the stock price, but I think more and more are looking and saying, well, okay, what can I do to be part of something larger, right? So the 3 CBD deals we did, for example, right? It's how do I fit into a larger ecosystem and get the upside of going public by holding High Tide or whomever shares without all the headache of going private myself and spending 4 months on, everybody loves the lawyers and bankers, but and then you find out there isn't an appetite, or there isn't the money there, or the money is there, and then you have to staff up on all these public company costs, and the stock is down. Well, why did I do this? So avoiding all that headache, M&A or partnerships make much more sense, especially in this macro environment.
So I'm not sure how much time do we have here?
I'm playing the heavy.
Oh, you are? Okay, I'm getting the hook here. Do we
He's
have
good at
time for a
that.
few questions, or are we really
Do you have
getting the hook?
questions?
Do we have any questions here for our
Can't see any.
actually, I can't even see the hands anyway, so, well, it looks like you can't.
These folks will be around.
We
Yeah,
were just
well,
so good, they have no
difficult,
questions.
yeah. It's
That's
difficult.
the
I can't
thing.
see if there are any hands or not. But let me do this. Let me go ahead and say thank you, because we are out of time here, to my esteemed panelists. I thought that was a fabulous conversation. I really learned a lot, and it's a great pleasure to be here. So thank you, Brianna, Vahan, Melanie, very much for that incredible conversation. I really appreciate it.